Imagine for a moment that you are standing on the deck of the Titanic. The air is biting cold against your face. The orchestra is playing a waltz and the music drifts out over the black water. Waiters in white jackets are pouring champagne into crystal glasses. The lights of the ship are blazing against the dark Atlantic sky. It looks like a floating city. Feels invincible. Everyone around you is laughing. Everyone is telling you that this ship is unsinkable. They are pointing at the luxury suites. They are pointing at the sheer size of the steel hull. They are toasting to the marvel of engineering that keeps them dry and safe. But you are not looking at the chandelier. You are not looking at the velvet curtains. You are leaning over the railing. You are staring down at the waterline. And you see something that nobody else is willing to admit. You see the water rising. You see the bubbles frothing against the iron. You hear the deep groaning of steel under pressure. While the party continues on the upper deck, the foundation is already failing. This is exactly where the Western economy stands today. We are living through the final euphoric days of an era we thought would last forever. For the last 80 years, the United States and Western Europe have dictated the rhythm of the global economy. They held the capital. They held the factories. They wrote the rules of the game. They owned the future. But look closely at the horizon. The center of gravity is shifting. It is not shifting slowly. It is shifting violently. We are witnessing the greatest wealth transfer in human history. And it is moving away from the old world. It is moving away from the safety of the status quo. It is moving toward the chaos, toward the noise, toward the hunger of the emerging markets. Most investors are still looking at the S&P 500 like it is a fortress. They are pouring their life savings into the same 7 tech stocks because that is what worked yesterday. They are sleepwalking into a burning building. The boom that is coming will not happen on Wall Street. It will not happen in the city of London or the banking districts of Frankfurt. It is going to happen in places that the mainstream news tells you to fear. It is going to happen in the places you have been told are too risky. The script has flipped. The prey has become the predator. And if you are not positioned for this shift, if you are still betting on the old guard, you are about to be left behind in the wreckage of the past. This is not a prediction. This is a mathematical certainty. The rebalancing has already begun and the window to act is closing. Before we reveal the 5 forces that are tearing the old world apart, I need you to make a choice right now. Are you going to be the passive observer who watches history happen from the sidelines? Or are you going to be the one who understands the game before the cards are revealed? If you want to survive the economic shift that is coming, you need to align yourself with the truth. Hit that subscribe button right now. Like this video to signal that you are paying attention. Comment below with the word shift if you are ready to see what the mainstream media is hiding from you. Let's get into it. The story of the next decade is not about growth. It is about survival. And to understand why the emerging markets are about to explode to the upside, we first have to understand why the developed world is dying. We need to look at the patient on the table and diagnose the disease. Walk through the streets of Paris today. Walk through the streets of Tokyo. What do you see? You see clean streets. You see beautiful architecture that has stood for centuries. You see high-speed trains that run on time. You see wealth accumulated over generations. But peel back the wallpaper. Look at the foundations. The developed world is trapped in a debt spiral that has no exit. There is no way out. America is adding $1 trillion of debt every 100 days. Think about that number for a second. $1 trillion. Every 3 months. They are printing money just to pay the interest on the money they printed yesterday. It is a Ponzi scheme written into law. Japan is a retirement home disguised as an economy. Europe is a museum run by bureaucrats who are more concerned with regulations than innovation. They have maxed out the credit card. They have printed the money. They have suppressed the interest rates to 0 for a decade, trying to stimulate growth that never came. And now the bill is coming due. Growth in the developed world has stalled. It is effectively 0. When you adjust for inflation and debt issuance, they are actually shrinking. They are cannibalizing their own future to keep the lights on today. The standard of living is dropping. The middle class is evaporating. This is the stagnation trap. It is a slow, comfortable death. It feels safe because the decline is gradual. But make no mistake, it is a decline. Now contrast that with the emerging markets. Vietnam, India, Indonesia, Brazil, Saudi Arabia. These are not perfect places. They are chaotic. They are volatile. They are risky. The traffic is bad. The bureaucracy can be maddening. The politics can be unstable. But risk is where the reward lives. While the West is trying to figure out how to pay for grandmother's hip replacement, the East is trying to figure out how to build new cities. The energy is different. The hunger is different. In the West, people want to work from home. In the East, people want to build a home. In the West, the dream is to retire early. In the East, the dream is to build an empire. This is not just an economic difference. It is a psychological difference. And markets are driven by psychology. We are standing at a bifurcation point. A fork in the road. To the left is the developed world. Low growth, high debt, aging populations, and a belief that the past dictates the future. To the right is the emerging world. High growth, low debt relative to GDP, young populations, and a burning desire to claim their place in the sun. The capital flows are about to recognize this reality. For the last decade, money flowed into U.S. tech because it was the only game in town. It was the only place offering growth. But valuations matter. The U.S. market is priced for perfection. It is priced as if nothing can ever go wrong. The emerging markets are priced for disaster. They are priced as if nothing can ever go right. And history teaches us one thing. When you buy assets that are priced for disaster and things turn out to be just okay, you make a fortune. But when you buy assets that are priced for perfection and things turn out to be just okay, you lose everything. The shift we are talking about is not just about stock prices. It is about power. Hard power. Soft power. Economic power. It is about who controls the resources. Who controls the labor. Who controls the trade routes. For a long time we assumed the West controlled it all. We assumed that because the dollar was the reserve currency, the U.S. could do whatever it wanted. We assumed that because the U.S. Navy patrolled the oceans, trade would always flow on American terms. But those assumptions are being tested. They are breaking down. The 5 forces we are about to break down are not theoretical. They are happening right now. You can see them if you look at the shipping data. You can see them if you look at the demographic pyramids. You can see them if you look at the central bank gold purchases. The mainstream media will not connect these dots for you. They will give you the headline about the election. They will give you the headline about the celebrity scandal. But they will not tell you that the tectonic plates of the global economy are grinding against each other. They will not tell you that an earthquake is coming. But I will. Let's begin with the first and most powerful force. The one force that no government can legislate away. The one force that no central bank can print their way out of. The demographic dividend. Demographics is destiny. You cannot cheat biology. You cannot print babies. You cannot legislate a younger workforce. Look at the average age of the population in the West. In Germany, the median age is 47. In Japan, it is 48. In Italy, it is 46. Walk into a town in rural Italy. What do you see? Silence. Shutters closed. Empty playgrounds. The people walking the streets are elderly. These are aging populations. They are shrinking workforces. The mathematics of an aging society are brutal. Older people do not buy houses. They do not start businesses. They do not drive innovation. They do not buy new furniture. They save. They consume healthcare. They draw pensions. They retire. They draw from the system rather than adding to it. Every year there are fewer workers to support more retirees. It is a top-heavy pyramid and it is wobbling. Now look at the other side of the ledger. Look at the global south. The median age in India is 28. In Nigeria it is 18. In Indonesia it is 29. We are talking about billions of people entering their prime working years. These are people who are just starting their lives. They need homes. They need cars. They need phones. They need bank accounts. They need insurance. They are the engine of consumption. The West has a labor shortage that is going to become a labor crisis. There is no one left to work the factories. There is no one left to drive the trucks. There is no one left to build the houses. The emerging markets have a labor surplus. Capital always chases labor. It has to. It is a law of physics in economics. Factories are moving, not because they want to, but because they have to. You cannot run a factory in a country where there are no workers. You cannot run a service economy without people to provide the services. This demographic cliff is the single biggest threat to Western prosperity, and it is the single biggest tailwind for the emerging South. We are looking at a world where the consumer class is relocating. By 2030, the Asian middle class will be larger than the entire population of Europe and North America combined. Think about that stat. Let it sink in. Who are Apple and Tesla and Coca-Cola going to sell to? They are not selling to the shrinking population of Italy. They are selling to the rising billions in the East. This is a tectonic shift in purchasing power. The wallet of the world is moving. But having people is not enough. A billion people are just a billion mouths to feed unless you have the resources to sustain them. You need to power them. You need to build for them. And you need to integrate them into the modern world. This leads us directly into the second fundamental force that is rewriting the global rulebook. The revenge of the real. For the last 20 years, the global economy has been obsessed with financialization. We fell in love with software. We fell in love with derivatives. We traded paper back and forth on screens in New York and London and called it wealth. We forgot about the physical world. We deluded ourselves into thinking that we could print prosperity. We forgot that you cannot eat Bitcoin. You cannot live inside a software application. You cannot drive a stock certificate. To build a civilization, you need steel. You need copper. You need wheat. You need oil. You need the hard atoms of reality. And guess who holds the keys to the physical world? It is not the G7. The G7 consumes commodities. The emerging markets produce them. The balance of power is shifting from the buyer to the seller. Look at the transition to green energy that the West is so desperate for. Look at the AI revolution that requires massive data centers. Look at the rebuilding of global infrastructure. All of this requires raw materials. And the supply of these materials is tight. It is finite. Latin America holds the lithium triangle. Africa holds the cobalt and the rare earths necessary for every single smartphone and electric vehicle. Russia and the Middle East hold the oil and gas that keeps the lights on. Indonesia holds the nickel. Brazil holds the iron ore and the soy. For decades, the West dictated the price of these commodities. They used their financial power and their futures markets to keep prices low. They treated these nations like gas stations, like mines, like servants. They would extract the raw material for pennies, take it back to the West, process it, and sell it back for dollars. But that dynamic is breaking. The producers are waking up. They are realizing that they hold the leverage. They are looking at the supply charts and realizing the West needs them more than they need the West. They are forming cartels. They are coordinating supply. They are demanding that processing happens on their soil. Look at Indonesia. This is the perfect case study. They possess the world's largest reserves of nickel. Nickel is essential for batteries. In the old world, they would have just dug it up and shipped it to Europe. But the Indonesian government said no. They banned the export of raw nickel ore. They told the world, if you want our nickel, you have to come here. You have to build your smelters here. You have to build your battery factories here. You have to hire our people. You have to transfer the technology. And guess what happened? The West screamed. They complained to the World Trade Organization. They threatened sanctions. But eventually they folded. They had no choice. The factories moved. Billions of dollars of investment poured into Indonesia. This is resource nationalism. And it is going to drive a massive transfer of wealth from the consumers of resources to the owners of resources. The era of cheap commodities is over. The emerging markets are no longer just extracting value for others. They are capturing it for themselves. They are moving up the value chain. They are taking control of their own destiny. This is not just about economics, it is about dignity. It is about sovereignty. This shift in the physical world is matched by a shift in the digital world. This leads directly into the third force, the digital leapfrog. There is a massive misconception in the West that emerging markets are technologically backward, that they are playing catch-up, that they are behind the curve. This is a dangerous lie that keeps Western investors complacent. In many ways, they are actually ahead, because they do not have the baggage of the past. In the US and Europe, we are stuck with legacy systems. We are stuck with banking mainframes from the 1970s. We are stuck with aging power grids that catch fire. We are stuck with slow internet infrastructure that costs billions to upgrade because you have to dig up existing cities. Emerging markets are starting from a blank slate. They are skipping the landline phase entirely. They are skipping the credit card phase. They are skipping the brick-and-mortar bank branch phase. They are going straight to mobile, straight to digital wallets, straight to blockchain, straight to 5G. Look at the payment systems in India. The Unified Payments Interface, or UPI, is light years ahead of the wire transfers used in America. In America, if you want to send money, it takes days or costs fees. In India, it is instant. It is free. It is universal. A vegetable seller on the side of the road in Mumbai takes digital payments with a QR code. A rickshaw driver takes digital payments. The velocity of money is accelerating. This digital infrastructure is not just a convenience. It is an economic supercharger. Look at the super apps in China and Southeast Asia. Apps like WeChat and Grab and Gojek. They have integrated commerce and finance and social media and transport in ways that Western companies are only dreaming of. In the West, you have an app for Uber and an app for banking and an app for chatting. In the East, it is one ecosystem. This is the leapfrog effect. When you build from scratch, you build with the latest technology. You do not have to waste money maintaining the old systems. This allows for rapid scaling. It allows for massive efficiency gains. We are seeing digital adoption rates in Brazil and Nigeria that put Europe to shame. This digital infrastructure is the backbone of the next boom. It brings the informal economy into the light. It gives credit to people who never had it before. It allows a farmer in a remote village to sell directly to a global market. It unlocks human potential at a scale we have never seen. The productivity gains from this digital revolution will be concentrated in the emerging markets because that is where the low-hanging fruit is. That is where the delta is greatest. But technology needs fuel. And that fuel is capital. And capital is moving. This is the fourth force. The great capital rotation. For a long time, global capital had only one home. The US dollar. US Treasuries. The New York Stock Exchange. It was the only game in town. It was the safe haven. It was the default setting for every pension fund and sovereign wealth fund on the planet. But the risk profile is changing. The calculation is changing. Investors are starting to look at the US debt levels and they are getting nervous. They are seeing the political polarization and they are getting worried. They are looking at the weaponization of the dollar through sanctions and they are getting scared. Smart money is looking for diversification. They are looking for growth. And you cannot find growth in a 0% economy. You have to go where the growth is. We are seeing the early stages of a massive reallocation of assets. Sovereign wealth funds in the Middle East are shifting their gaze. They used to just buy trophy assets in London. Now they are investing in infrastructure in Asia. Family offices in Singapore and Hong Kong are looking south. The stock markets of India and Brazil and Saudi Arabia are becoming deeper. They are becoming more liquid. They are attracting the kind of capital that used to flow exclusively to Western tech stocks. This is not a trickle. It is a flood. Think about the sheer size of global capital. Trillions upon trillions of dollars. Currently, less than 5% of global portfolios are allocated to emerging markets. If that number goes to just 10%, it creates a tsunami of liquidity. It drives up asset prices. It funds infrastructure. It creates a virtuous cycle of wealth creation. The West is expensive. The emerging markets are cheap. Valuations matter. Buying the S&P 500 at near all-time highs is a play on momentum. It is a gamble that the music will never stop. Buying emerging markets at historic lows is a play on value. And value always wins in the long run. But money is nothing without trade. And the way the world trades is changing fundamentally. This brings us to the fifth and perhaps most disruptive force. The new trade routes. Globalization as we knew it is dead. The era of just-in-time supply chains stretching across the Pacific to stock the shelves of Walmart is over. We are entering the era of regionalization. The era of the Global South trading with the Global South. For decades, all trade roads led to the West. The map of global trade looked like a wheel with the US and Europe at the hub and everyone else on the spokes. China made things for America. Brazil grew food for Europe. Africa mined resources for the West. But now look at the data. The hub is dissolving. The spokes are connecting to each other. China is trading more with the Global South than it is with the West. India is buying oil from Russia. Brazil is selling soy to China. Saudi Arabia is dealing with everyone. These are new arteries of global commerce. They completely bypass the Western gatekeepers. The BRICS alliance is not just a photo op for politicians in suits. It is a declaration of economic independence. It is a union of the ignored. For decades, the global financial system was built to serve the West. SWIFT was the weapon. The dollar was the chain. But these nations are breaking the chain. They are building their own payment systems. They are building their own insurance networks for shipping. They are building their own trade agreements that do not require approval from Washington or Brussels. This insulates them from Western sanctions. It insulates them from the whims of the Federal Reserve. It creates a self-sustaining ecosystem of growth that can survive even if the West goes into a recession. The West is becoming an island. A rich island, but an island nonetheless. The rest of the world is connecting. They are building roads across continents. They are building ports in deep water. They are laying pipelines across deserts. The Belt and Road Initiative was just the beginning. We are seeing the reconstruction of the Silk Road. And this time it is digital. It is industrial. And it is massive. The sheer volume of trade that is going to happen between these nations will dwarf the transatlantic trade. This is where the next trillion-dollar companies will be born. Not serving the tired consumers of the West who already have 5 streaming subscriptions, but serving the rising middle class of the Global South who are buying their first car, who are taking their first flight, who are buying their first insurance policy. The growth multiplier is infinite compared to the saturation of the West. Now I know exactly what you are thinking. I can hear the skepticism in your mind because the media has planted it there. You are thinking about the corruption. You are thinking about the political instability. You are thinking about the currency risks. You are thinking about the headlines of coups and protests. And you are right. Those risks are real. I am not here to tell you that emerging markets are safe. I am not here to tell you they are Switzerland. That is why it is called emerging. It is not emerged. It is messy. It is violent. It is unpredictable. But that is exactly why the opportunity exists. If it was safe, it would already be expensive. If it was perfect, the money would already be there. If the institutions were perfect, the P/E ratios would be 30. You have to understand the psychology of markets. Markets climb a wall of worry. The biggest booms happen when things go from terrible to just okay. They do not need to become perfect overnight. They just need to become a little bit better. A little bit more stable. A little bit more open.
and the
returns will be exponential. Think about it like this. If a company in Germany improves its efficiency by 1%, it is a headline. If a country like India builds a highway system that cuts transport time in half, it changes the entire economy. The delta is massive. The West is priced for perfection and delivering stagnation. The emerging markets are priced for disaster and delivering growth. That gap is your opportunity. That gap is where the alpha is. You are getting paid to take the risk. In the West, you are taking risk and getting paid nothing. When you buy a U.S. Treasury bond today, you are locking in a loss after inflation. You are paying for the privilege of losing money slowly. In the emerging markets, you are taking volatility, but you are buying real growth. You are buying into demographics. You are buying into resources. You are buying into the future. The corruption argument is often overplayed. Yes, there is corruption. But is there no corruption in the West? Is lobbying not corruption with a tie on? Is the revolving door between regulators and banks not corruption? The difference is transparency. In the emerging markets, the corruption is often visible. In the West, it is institutionalized. Do not let the search for moral purity blind you to economic reality. Capital does not care about feelings. Capital cares about returns. And the returns are in the South. We are deep into this analysis. We have covered the demographics, the resources, the technology, the capital flows, and the trade routes. The picture should be getting clear. But there is one final piece of the puzzle. The escalation. The catalyst that makes this happen now. Why not 10 years ago? Why not 10 years from now? Why is this the moment that history will look back on as the turning point? Because the system is breaking. The old order is fracturing under its own weight. The US dollar is losing its grip. The sanctions on Russia in 2022 woke the world up. It was a watershed moment. Every central bank in the global South looked at what happened to Russia's reserves. They saw $300 billion frozen overnight. And they said that could be us. If we disagree with U.S. foreign policy, our money is gone. They realized that their money was not safe in Western banks. They realized that the dollar was not a neutral store of value. It was a political weapon. So what did they do? They started buying gold. Central bank gold buying is at record highs. China is buying. India is buying. Turkey is buying. Singapore is buying. They are swapping paper promises for hard assets. They are settling trade in local currencies. The rupee, the yuan, the dirham. This is the beginning of the end of the exorbitant privilege. When the demand for dollars drops, the cost of borrowing for the U.S. goes up. The debt crisis accelerates. Inflation comes back with a vengeance because the U.S. can no longer export its inflation to the rest of the world. And when that happens, capital flees. It flees the burning house. And it goes to the places that have real assets, real growth, real production. The collapse of the old order is the catalyst for the rise of the new one. It is a seesaw. For one side to rise, the other must fall. We are watching the seesaw tip. And it is tipping fast. The geopolitical tension we see every day on the news. The wars. The tariffs, the threats. These are not signs of strength from the West. These are the death throes of a system that is losing control. The chaos is the signal. The chaos tells you that the transition is happening. Do not fear the chaos. Embrace it. Understand it. Profit from it. The timeline is shrinking. What used to take decades is now happening in months. The adoption of AI is accelerating the productivity gap. The shift in energy markets is accelerating the wealth transfer. The realignment of alliances is happening in real time. It is all compressing. You do not have time to wait and see. By the time the headline hits the Wall Street Journal, it is too late. By the time your financial advisor tells you to invest in India, the easy money has been made. By the time the ETF is popular, the top is in. You have to be ahead of the curve. You have to see the unseen. So what does the future look like? Close your eyes and imagine it. Imagine a world where the largest economy is not the United States. Imagine a world where the financial capital is not New York. Imagine a world where the innovations in energy and medicine and space travel are coming from the East. That is the world we are barreling towards. It will be a multipolar world. A fragmented world. A world of blocks. But for the countries that have the demographics, the resources, and the technology, it will be a golden age. The next boom will create millionaires and billionaires who saw this coming. It will create dynasties for those who positioned themselves early. And it will wipe out those who clung to the past. It will wipe out those who thought the party on the Titanic would last forever. This is the great rebalancing. It is harsh. It is unsentimental. It does not care about your nostalgia. And it is inevitable. The developed world had its run. It had a glorious century. It built the modern world. But the sun is setting on that empire. And the sun is rising in the east. The shadows are getting long. The air is getting cold in the old capitals of finance. But elsewhere, the fires are just being lit. The engines are revving up. The people are hungry. The dream is alive. It just moved addresses. We are standing at the crossroads of history. One path leads to stagnation, to debt, to decline, to managing the decay. The other path leads to volatility, to risk, but also to growth, to the future, to building the new. Which path are you on? Look at your portfolio. Look at your skills. Look at your mindset. Are you positioned for the world that was? Or are you positioned for the world that is coming? The battle for the future has already been won. The West just hasn't admitted defeat yet. They are fighting a phantom war. They are fighting to preserve a memory of dominance that no longer matches the reality on the ground. The emerging markets are not coming. They are here. And they are taking the lead. They are not asking for permission anymore. They are not waiting for a seat at the table. They are building their own table. And it is bigger. It is stronger. And it is open for business. This transition will be uncomfortable. Change is always uncomfortable. It feels safer to cling to the known. It feels safer to invest in the companies you grew up with. It feels safer to believe that the dollar will always be king. But comfort is the enemy of profit. Comfort is the enemy of survival. In the jungle of the global economy, the moment you get comfortable is the moment you get eaten. The lions are hungry, and the gazelles are slow. Do not be the gazelle. You have to realize that the narratives you consume are products. They are designed to keep you calm. They are designed to keep you buying the debt. They are designed to keep you inside the system. But the system is leaking. The smart money left a long time ago. Look at what the billionaires are doing, not what they are saying. They are buying land in New Zealand. They are buying gold. They are investing in Indian infrastructure. They are hedging. They know the music is stopping. They are just waiting for the public to realize it so they can sell their bags to you. Do not be the exit liquidity for the old world. Be the early adopter of the new world. This is more than just economics. It is a shift in human energy. Go to an airport in Dubai or Singapore or Mumbai. You feel it in the air. There is a buzz. There is an optimism. People walk faster. They talk louder. They believe that tomorrow will be better than today. Now go to an airport in London or New York. It is tired. It is cynical. People are angry. They are worried that tomorrow will be worse than today. That psychological gap is the most powerful economic force on earth. Optimism drives investment. Optimism drives consumption. Optimism builds empires. Pessimism manages decline. You want your money to be where the optimism is. You want your future to be aligned with the ascent, not the descent. We are entering a period of history that will be written about for centuries, just like we study the fall of Rome. Just like we study the rise of the British Empire. Future generations will study the great rebalancing of the 21st century. They will study how the torch was passed. They will study how the global South rose up and reclaimed its destiny. They will look at the charts we are looking at today and say it was so obvious. Why didn't they see it? Why did they keep betting on the dying horse? Do not let your grandchildren ask why you didn't see it. You have the data. You have the logic. You have the vision. Now you need the courage. The courage to go against the herd. The courage to bet on the unknown. The courage to embrace the shift. This brings us to the end of our journey today, but the beginning of your preparation. The 5 forces we discussed are grinding away at the bedrock of the global economy every single second. They do not sleep. They do not stop. They do not care about your political affiliation. They do not care about your nationality. They only care about gravity. And the gravity is pulling east. The gravity is pulling south. The next time you see a headline about a crisis in the West or a breakthrough in the South, remember this framework. Remember that you are watching the gears of history turn. Do not let the fear paralyze you. Fear is a reaction. Courage is a decision. Let the fear sharpen you. Let it wake you up. Let it drive you to learn more, to dig deeper, to question everything. Knowledge is only power if you act on it. Knowing that the ship is sinking does not save you if you do not get on the lifeboat. Take a hard look at where you are standing. The ground is moving. Make sure you are moving with it. If this analysis opened your eyes, if it made you think differently about the world, if it shattered some of the illusions you have been holding on to, then your journey is just starting. There is so much more to uncover. So many more layers to this story. The rabbit hole goes deep, and we are going to explore it together. We are going to map the new world. We are going to find the opportunities hidden in the chaos. Stay curious. Stay skeptical of the official narrative. And most importantly, stay ahead of the curve. The world is changing. Change with it, or get left behind. The choice is yours, and the time is now. Thank you for giving me your time and your attention in a world that is fighting to steal it. Reflect on what this battle for the future means for you and your family. I will see you in the next video.